Dalal Street ends in the red. The Nifty fails to hold 25,600 with nearly 40 stocks ending lower. Banks and midcaps fall in line with the blue chips.
And SBI beats Street in estimates in second quarter FY26. A 4,593 crore gain from Yes Bank stake sale boosts its bottom line. It was a smooth drive for M&M in the second quarter as well. The company reports an operationally strong quarter with headline numbers seeing double-digit growth.
Bharti Airtel also beat expectations in the second quarter. The board approved an additional 5% stake in Indus Towers. The management clarifies that it will take up the AGR relief matter with the government.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. Here it's going to be the next trading day, the day after that. So yes, keep an eye out on that. Tomorrow is a holiday, but nonetheless, we will set you up for trade. I'm Vinny Motiwala. With me is my colleague Hormaz Patakia as well. And Hormaz, it's been a day of a consolidation that we saw coming and a bit more of a sharper fall that came in the second half of the trading session. Today, Nifty again that below 25,600 levels. So that's what we'll be keeping an eye out on Thursday as well.
Something that the bulls will not like, a couple of things. The index ending at the lowest point of the day, that was one. And the fact that it could not sustain at that support cluster of 25,650 to 25,700. It did manage to do so for a better part of the trading session. But come the last hour of the day, and it just gave up all of that resilience and eventually ending just a shade below that 25,600 mark. Of course, the fact that tomorrow being a holiday, so of course there would be some bit of profit taking for that as well. And of course, today being the expiry session, that also weighing on the reactions that happened on the markets. The Nifty Bank also, despite the strong results from SBI, the guidance that was raised, the outperformer of yesterday, the underperformer of today, the Nifty Bank was up in yesterday's session, but it gave up most of those gains in today's session. So declining and ending almost 300 points lower for the index. So not a very good session if you are a bull, Vinny, but nothing too alarming as of now at least.
Absolutely nothing too alarming as of now. But well, we have a very exciting lineup for you all on the show today. We'll start the show with the top movers and shakers alongside with Gaurav, who will cover the earnings for SBI as well. M&M and other earnings were also reported. We'll take a look at all of that. We'll also look at Bharti Airtel as its management clarifies it will take the AGR matter to the Supreme Court. Last but not the least, we'll delve into the key market events to watch out for in the next trading session. But let's get started. And for the first segment, let's go across to Gaurav, who is joining us from the big wall for the top movers and shakers of the day. Gaurav, over to you.
Well, yes, as you suggested, it was not the day for the bulls, but at the same time, we also have some stocks who actually gained in trade. And first, let's talk about 3M in India. We saw operationally strong performance, and at the same time, all the four segments, they actually outperformed. As a reason, around 17% growth is what we saw. Hitachi Energy, here also we saw profit actually coming up higher than the expectation, and as a result, market actually treated it well with 14% gains. We also saw City Union Bank actually reporting very good set of numbers. In fact, net interest margins, they improved almost by 9 basis points. And at the same time, if we look at the stock performance, although it's up almost by 10%, it is also at its all-time high level. Let's also not forget about Thangamil Jewelry. Yesterday also we marked this stock. Today also this was up almost more than 16%. And if we look at the last 5 days performance, it is up more than 40%. So definitely a treat for investors. At the same time, we had other stocks like TBO Tech, Jyoti CNP, MRPL, all the players who were actually up in trade more than 5% today. Other than that, on the losing side, when we look at Blue Star, profit declined almost by 10%, and as a result, we saw stock decline almost by 10%. Apart from that, Home First Finance, when we look at the stock performance, it was down almost by 5%. Yesterday, remember, the stock was up almost by 5%. So, and today is the result. So let's watch out on this stock as well. Godfrey Philip. Now, here we saw the numbers were not that great, and as a result, we saw the stock tanking almost by 3%. CDSL, we saw JM Financial actually downgrading the stock to reduce, and as a result, the stock declined as well. Hero Motors, the October sales data, if you look at the numbers, those were a bit below estimate, and that is the reason why Street did not take it in a positive way. We saw some fall here as well. And other than that, we saw Reliance Power, Reliance Infra, Transformers and Rectifiers, NCC, Vocart, all the stocks who were down in trade today.
Gaurav, thank you for that highlight. Take that conversation forward. Jay Bala of cashthechaos.com and Dipan Mehta of Elixir Equities are also joining in. Gentlemen, thank you for joining in. Jay, first to you, the ending at the lows of the day for the index. Now, what do you make of today's move and what to look forward to in terms of levels going into Thursday's session?
Yeah, I'm looking at Nifty to bottom really soon, and the 10-day correction that we have been having from 26,104, it's coming to very close to a very important support at 25,550, and I don't think as long as the Nifty can stay above 25,330, I would still expect the Nifty to challenge the all-time high. But if 25,330 were to get taken out, then I need to revise my opinion. But I don't think that's going to get tested. Probably we're going to have a bullish start on Thursday.
So in that case, of course, we'll expecting a bullish start on Thursday. The big result of the day, of course, was SBI, a beat on expectations in the second quarter. 4,593 crore gain from the Yes Bank stake sale also boosted its bottom line, and credit growth also better than the industry average. Gaurav is here with a lowdown of how the numbers were. Gaurav.
Well, yes, when we look at SBI, actually very great set of number from the bank, biggest bank of India. So when we look at the numbers, advances that increased almost by 13% on a year-on-year basis, while deposits increased just by 9%. But remember, advances growth was higher than the Street's expectation, while deposit growth in line with the Street's expectation. When we look at the numbers, net interest income, now here we saw the actually bank reporting numbers which were better than estimated. Net interest income increased almost by 3% on a year-on-year basis, and this is something that we saw in net interest margins as well. PPOP, which is pre-provisional operating profit, we saw a degrowth of around 7% on a year-on-year basis. It was in line with the Street's expectation, but ahead of that, when we look at provisions, we saw actually provisions for the asset loan losses, they actually declined sequentially, and at the same time profit that increased almost by 10% on a year-on-year basis, and this was because of the one-off impact of 4,593 crores because of the Yes Bank stake sale. Other than that, if you look at the ratios now, net interest margins that increased by 7 basis points, it is actually positive for the bank. Credit costs that declined almost by 8 basis points, and at the same time, if you look at slippages, in absolute term also slippages have declined, and slippage ratio that has declined almost by 30 basis points on a sequential basis. Other than that, if we look at some of the other metrics in terms of asset quality, the SMA 1 and 2 book that has also declined. So definitely it was a very great show in terms of asset quality. It was a great show in terms of growth as well. In fact, during the media conversation, management also said that in FY26 they can actually achieve 12 to 14% credit growth. So that is something that can be taken in a positive way. So all in all, in terms of number, good set of number reported by SBI in this quarter.
Okay, good set of numbers reported by SBI in this quarter. But, Deepan, I just want to talk to you about PSU banks, the numbers that have come in so far as well. SBI, good numbers, but overall, how are you seeing PSU banks doing now?
Good afternoon, and thank you for having me on your show. I think the PSU banks are clearly the outperformers in the banking industry, although I'm not completely satisfied with SBI's numbers. Kind of a low single-digit operating profit growth rate, net interest income, I think below expectations, according to us at least. One would have expected them to do much better. But I think the real growth is in the smaller, mid-sized PSU banks, and now their balance sheets, their qualitative and quantitative data is somewhat what we were used to seeing in the private sector banks. That's missing in the private sector banks, at least the large ones. So I think within the banking space, one needs to be with the PSU banks. The smaller ones like Bank of Maharashtra is there, or even Indian Bank is there, or there's some of the mid-sized Bank of Baroda, Bank of India, Canara Bank. I think these companies should be clear outperformers within the banking industry, although our view for the industry is to be neutral and not overweight.
Neutral and not overweight. Of course, the PSU banks have run up quite significantly as of yesterday's close. At least 6 of them were at a 52-week high. Some of them came off in today's session. But staying with earnings, Mahindra and Mahindra also ended 2% higher after an operationally strong quarter. It was the auto volumes boosted growth, while the rich tractor revenue also was impacted margins positively. Sudarshan is here with more details on this. Sudarshan.
So it was an operationally strong set of earnings from Mahindra and Mahindra for Q2 FY26. Two outliers. First one is the surprise on the margin front. It has reported margin of more than 14%. And second, continued gain in the market share for majority of the segments. Now, revenue is higher by almost 21%. And that was boosted by the volumes increase that company has seen for both auto segment as well as the tractor segment. In the tractor segment, volumes have increased by almost 31% if you compare YOY. So headline numbers, profit has increased by 18%, revenue, as I told you, 21%, EBITDA has seen an increase by 23%, and margin surprisingly has come at 14.5%. We were expecting margin to come in the range of 13.8 to 13.9%. That might have seen a fall, but it has come at 14.5%. That's an expansion of almost 20 basis points. Talking about the segment-wise, in the auto business, revenue has increased by 18%, EBITDA has seen a jump of 14%, and margin has slipped. That's a minor dip to 9.1%, mainly because of GST transition. But if you take a look at the tractor segment, their revenue has increased by 23%. EBIT was up as much as 48%, and margin has increased 20% versus 16% in the same quarter last year. Realization for auto segment was up 4%. For tractor segment, there was a minor dip of almost 7%. In the commentary, what exactly would we be looking for? What does company talk about the PV industry outlook for FY26? If there is any uptick from the previous estimate of low single-digit growth. For tractor, we are expecting a high single-digit growth, but in the press conference, company had said that they are expecting now low double-digit growth. Also, what's the strategy to meet CAFE 3 emission norms, and what exactly company talks about the new launches? But as far as earnings are concerned, it's an operationally beat.
Operational beat. Sudarshan, thank you for that update. And Indian Metals and Ferroalloys will now acquire Tata Steel's Ferroalloys plant in Kalinganagar. The transaction is expected to be completed in 3 months. Nigel is here with more on this. Nigel.
Well, that's right. A big deal was announced. Infra went ahead and they have gone ahead and they have bought Tata Steel's ferrochrome unit. That's at their Kalinganagar unit. The total acquisition cost is around 610 crores, but they mentioned also that net working capital will be in addition to this. The transaction is expected to close within 6 months on. This is positive because Infra effectively will be doubling their capacity from the current capacity that they have. Remember, currently they have around 2.84 lakh tons of capacity. Organically, they are adding close to around 1 lakh tons odd. And in addition to that, I understand that Tata Steel unit will have a capacity of around 1.5 lakh tons or thereabouts. So in all, they'll be going from around 2.8 lakh tons to around 5.3 lakh tons or thereabouts. We'll need to understand though how much of capex they'll have to spend to get this new capacity, 1.5 lakh tons that they're acquiring, up and running. So we'll have to find out that aspect. Why is it positive? Because the company is going to be scaling up, both in terms of size, capacity, and the EBITDA from around 500 crores could very well look like 1,000 crores of EBITDA in the coming years as well. They're backward integrated. Chrome ore is in short supply globally. So net, it's a win for Infra. The stock, though, is at a 52-week high. That's why some kind of profit taking from the top. But in the longer term, this could be a bit of a re-rating event for Infra.
Okay, thanks so much for that, Nigel. But let's also look at Bharti Airtel because that gained nearly 2% after it beat estimates in the second quarter. A good show in India and Africa saw 10% uptick in its ARPUs as well. Airtel's board also cleared an additional 5% stake purchase in Indus-Towers. Now, speaking about the investment, Bharti Airtel's management also said that it is saw Indus as an undervalued and strategic asset. And on the AGR relief matter also, they clarified that it would be taking up the matter with the government as well. Listen in.
We've always said that the AGR judgment, which we sought reviews on around calculation errors, was something that having lost was a disappointment for us. So in that sense, we are pleased that this has been allowed for a reconciliation by the court. We are now going to be taking it one step at a time. So first, we're going to reach out to the government, and that is something that the company will do over the course of the coming days. Then we'll take it from there.
Interesting remarks there from the management of Bharti Airtel. Deepan, do you agree with what Bharti Airtel said with regards to Indus Towers, an undervalued and strategic asset, and therefore the intention to increase their stake? What do you make of Bharti's numbers first and their remarks on Indus Towers?
Yeah, very, very impressive set of numbers. Best in class, I would say, and 10% type of increase in ARPU and still surging. Still expectations of that going higher, very impressive. I think they fired on all cylinders. Africa also did well, India also did well. Some of the new initiatives are gradually creating value. And I think Indus Towers has definitely been a strategic asset for them. But they sense that with Vodafone now being going to get certainty in terms of its survival, I think Indus Towers will be a key asset for them as well, as it will have a new lease of life when Vodafone starts to expand as well. So very positive on Bharti Airtel. A disclosure, we and our clients are invested in it.
Very positive on Bharti Airtel, as is most of the street as well. Jay, on the charts, Bharti, or even a view on Mahindra and Mahindra, if you could give us that, because even that stock has seen a significant run up towards its 52-week high levels.
Yeah, hi, Harman. I've been bullish on Bharti since November 2023. So, it's been run up. It's doubled from much beyond double from there. And the price structure is such that it's coming to very late stages of its rally. It's time to take profits, and at least partially, if not completely. When it comes to Mahindra and Mahindra, I've been bullish on it since July, even before the Prime Minister announced the GST cuts in August. So the stock is still bullish. Auto sector as such is still bullish, but we might want to shift focus from auto names to something like tire names, which are looking like they have much more steam left. And within the auto space, we might want to look at something like Force Motors, which might still have higher highs to come through. But when it comes to auto stocks as such, it might be just for the short term. They still have fresh record highs to come through, but short-term pullback may be due.
Okay, Jay, that's the view coming in there. Thanks so much for that. And thank you so much, Jay, as well as Deepan, for joining us and speaking with us as always. But on that note, we're going to slip into a very short break. We'll get to the top corporate voices along with the key market events to watch out for on the other side.
Welcome back. Going across to some key corporate voices now. First up is Tata Consumer, and it delivered a strong second quarter. It was an 18% top-line growth and solid volume performance as well. The management has guided for margins to be around 15% by the fourth quarter, and it also aims to maintain its market share in the salt segment. The management also added that there is a slowdown in Starbucks expansion, but the opportunity remains. However, the stock slipped in trade today despite the strong numbers.
And from one Tata company to another, Titan's management is optimistic about the growth outlook. By FY26, the company expects around 20% revenue growth in its jewelry business, with margins seen at nearly 11.5%. That's not all. The management is also guiding for a mid to high teen growth in the eyewear segment, which it believes is well within the reach.
And Thangamayil Jewelry was the other stock, was up 20% yesterday, another 16% today after its second quarter numbers. The higher gold prices and a favorable base boosted the company's performance. The management told CNBC-TV18 that it expects to cross over 7,000 crore rupees in revenue by FY26 compared to its earlier guidance of 6,000 crore rupees. And it also expects to maintain margins at that 6% mark. Now, the management has added that the focus will remain on growth in and around Chennai over the next 2 years, which is expected to account for 20% of its sales in FY26. You know, interestingly, Vinny, I was just looking at the shareholding pattern for Thangamayil, and one of the names that comes in is R.G. Chandramogan, who is the promoter of Hatson Agro. And at the highest point of the day, the stake that he has is now valued at over 100 crore rupees. Now, the stock is only a 1% stake, it's a 1.1% stake odd. But Thangamayil Jewelers, 35, almost 35 to 40% higher in just the last 2 trading sessions. And before we wrap, we'll bring you some key events to watch out for going into tomorrow and for Thursday. Tomorrow being a holiday, of course. Gaurav is standing by with the key events to watch. Gaurav.
Well, yes, tomorrow is a market holiday, but it doesn't look like it is going to be market holiday for all of us, because we have got earnings. In terms of the pharma pack, we have got earnings from Aurobindo Pharma, Sun Pharma, Zydus. Other than that, Procter & Gamble Health and Piramal Pharma. And apart from that, we also have earnings from Honeywell Automation, Ramco Cement, Blue Star, NIIT Learning, Team Lease. All of these companies, along with others, will come up with the earnings. So definitely, it is going to be a busy day. At the same time, from the global markets, we are not picking up any other cues. But at the same time, let's also not forget that US Supreme Court will be hearing oral argument on the legality of Trump's global tariffs. So that is something, a key thing to watch out, not just for Indian market, but for the global market front. So definitely, in terms of earnings, we've got a couple of stocks to track. And at the same time, from the global front, let's see if anything material comes up from the US Supreme Court.
Okay, Gaurav, thank you so much for that. We'll keep an eye out on those whole host of earnings. But with that, we're absolutely out of time on this edition of Markets Forward. Thank you so much for tuning in. Don't go anywhere. We'll be back with more news and updates on the other side.